Hi, this is Joe Rabil from Rabil Stock Research with your Daily 5. On today's show, I'm going to focus on what I'm calling the 5 T's. That is the 5 stocks which have a market cap over 1 trillion. These are the 5 most important stocks as it relates to the influence on the market since their weightings are so huge. On this video, I'm going to be covering their price, their trend, and momentum in all 4 time frames for these stocks. So let's go ahead and get going with Apple being the number one in terms of size. And again, don't underestimate. If you go and do the math, you should realize that if these 5 stocks are down, the market's going to be down. I mean, this is a very high probability because they're playing such a huge role in what's taking place in the indexes themselves. So we want to keep an eye on this. I do a report for my subscribers I call the heavyweights, which is the top 30 stocks in market cap. And I think if you know what's going on with those names, you have a pretty good idea. But these top 5 are really crucial. So as we start with Apple, let's start with the monthly chart. And so just for anyone new to this setup here, I've got my grid. I've got a monthly chart in the bottom left, weekly in the bottom right, daily in the upper right, and an hourly in the upper left. Now, I use the exact same setup for all 4 time frames. I use an 18 and a 40, a simple moving average. I use standard MACD. I use a 13.8 ADX setup, and then volume. In all 4 time frames, I do the exact same. And most of the patterns that I look at repeat in all of these time frames. All right, now let's look at the what's taking place on Apple on a monthly chart. So we've gone to a new high here, which to me was a little bit of a surprise. It wasn't a surprise that it rallied off the 40 and came back to test this area, but for it to actually attempt to go to a new high, it just didn't look ready for that. And I think maybe that's why this is starting to correct, and I wouldn't be surprised if we spent a little bit more time in consolidation on this stock. And there's a couple of reasons why I believe that. Number one, you get this big move to the upside, and look at the confirmation on an ADX basis on this move. And then we get a pretty deep correction, and this is attempts to break out, and we just don't get the same type of momentum condition based on the buyers. They're just not as strong, anywhere near as strong as they were on this leg. So it just leads me to believe that we could have some kind of a deeper consolidation. The second thing, and one of the things I really wanted to focus on these 5, is the MACDs on these time frames. So look at this pullback and look at how the MACD still did not get anywhere near its zero line. There's a lot of separation here. Normally, that when we have this big of a move and we get this far away from the zero line like this, we want to see this come down a little bit closer to zero. And when that doesn't happen and we turn up like this, then I tend to expect a little bit more like sideways consolidation, something like that. We need to work off the overbought condition in some way, shape, or form. If we're not going to make it down to zero, then we might just need to go sideways for a bit. And I wouldn't be surprised if it plays out that way. So that's the bigger picture pattern, which leads me to believe we ought to pull back. Now, if you go and you look at what's taken place on the weekly chart, we did have this basically break a trend line. Okay, and then so that's the 1 and a change in trend. 2 is this rally, this test of this prior peak. All right, and then 3 would be taking out this low, which we have not done. So I actually just did a video on my YouTube channel related to this. And what I call it is transition. Right now, this stock is in transition on this time frame. It's no longer in the bull trend, but it hasn't turned bearish yet. If we actually come down through this prior low, then I would consider it to be a lot more meaningful. Now, as it relates to this whole situation, though, I would view that as a higher probability of coming down to test the 18-month line. So I'm still looking at this as a correction phase. And when we look at what's taking place in the MACD on the weekly chart, we got way overdone. All right, and now we're trying to correct, and I think this needs to work its way back down closer to zero to set itself up again. All right, so that's what I'd be looking for. Notice the size of these big red bars. We got some selling volume showing up, some pretty good size selling in terms of the size of the bars, something we haven't seen in a while. If we go back on this chart, this goes back to April of 21. The two biggest red bars, well, this is definitely the biggest red bar on the chart. Well, maybe this one right here. But either way, they're starting to build up a little bit with a little bit of volume. I definitely think that's worth taking note. Now, on a daily chart, this is more of a sideways pattern. We've got the 18 flat, all right, and we failed at the zero line in MACD. So we got overdone to the downside on this time frame, and so it needed to work off the oversold condition, and it rallied up to zero and failed. So now it's not really overbought, not really oversold, and it's a little bit trendless right now on this time frame. It's not really telling us one thing or another. Now, I think what will tell us a lot is if we fail at 180. If this rallies up and can't get through 180, then I think we have to be a little bit more worried about a drop taking place here. A little bit of volume selling as well. Now, the interesting thing is the hourly here. This is actually trying to show some signs of improvement. But when I look at it as it relates to this, there's really not an upside play. We've got a big gap down on the daily chart. We've got some resistance, as I said, starting around 180, maybe working up to 185. So unless you're really nimble and you want to play for a quick play, that's about it. I don't really like the overall pattern in terms of momentum and everything. MACD is getting back above zero, but like I said, that's probably just for a trade. All right, let's go on to Microsoft. So it's similar in the way that it took off on the monthly chart. You see this big move that took place, but notice how this only just barely made it to a new high. This just nicked the new high and couldn't hold it at 350. And so I call that a failed new high. While the MACD did work down a lot closer to the zero line, it still probably needs a little bit of time to work off this overbought condition. We've still got some distance between price and the 18-month, and it hasn't been tested since it crossed it back 4, 5, 6 months ago. Now, I think the weekly chart is telling us a much clearer picture where we have this move down that overran the 18. The 18 looks a little tired. You can see it in MACD. I just think this wants to consolidate some and let this MACD work down a little bit closer. Now, one point I want to make is for both Apple and Microsoft so far, the ADX is very strong. And despite what's taking place in MACD, we have to respect the strength of this up leg. And what does that mean to me? It means that I think this is a corrective pattern and not an ending action. I don't think this is the top that's going to turn the trend around. I think this is a pause in an ongoing uptrend. It might take a while. It might take another month or two to get this set up again. But based on what I'm seeing here and the movement to the upside, I would tend to believe that even if we correct down here, there's a very good chance we're going to at least come back down and come back up and test this peak. Now, on a daily chart, again, we don't really have anything going on. There's no momentum in place based on ADX. The MACD is kind of waving above and below the zero line, and so is the price. The price isn't respecting the moving averages at all, and we don't have the improvement like we saw in the Apple hourly. We don't really have that taking place here. In fact, it looks a little bit more negative based on the momentum. You almost want to look at this as a little bit of a trading sell on a rally. Now, we'll go to Google. This one has not really shown any signs of topping yet. The monthly chart had a little bit more of a convincing correction. You see how this came down? It overran the moving average, but look at how the MACD turned at the zero line. So it's benefiting from that right now because it got a full-fledged correction back to the zero line, and this is a true zero line reversal, and we're getting kind of a move back to the upside. But just realize we're coming back up to this high. When we crossed this declining moving average, it was still, when we crossed this line, it was still declining. So I'm expecting this to consolidate, probably has support around 125. And we haven't shown any signs on the weekly chart that it's really ready to roll over yet, especially when you look at this red DI. You look at the red DI. I talked about this a few weeks ago. Until we see this make a higher high here, it's trying to make a higher low, but if it makes a higher high, then we know that sellers are starting to show up, and that increases the likelihood the MACD is going to break its signal line, and we're probably going to go through a corrective pattern. So something to be on the lookout for. Look for a break of the 18-week. Look for a MACD cross of its signal line. But most importantly, all right, now I'm looking for sellers to show up with the red DI. Now, one of the reasons why I want to look for that is because as we've moved up here, we've started to lose some momentum. We had a lot of strength in the momentum on the daily chart here, but on this move, it's just kind of pushing higher without a lot of strength behind it. And then on the hourly, it's again, no trend, more sideways, not very convincing at this point. If we look at Amazon on a monthly chart is a lot different. The correction was much deeper. It wasn't a zero line reversal. It broke the zero line. So now we have to assume there's going to be resistance on this time frame as we rally up. You see what I mean? So I think there's probably a built-in resistance area right around 150 is my bet. And it looks to me like this wants to come back and check this declining moving average, let it pull back while this line cups around. Then it could look a lot more interesting as this cups around potentially and makes a double bottom. So if we look at what's taking place on the weekly chart, once again, we have tremendous momentum here, but it does look like it's getting a little tired. We have green DI not confirming this last peak here, and we have MACD not confirming this last peak here. So we've got some signs that this potentially might want to finally go back and consolidate and correct a little bit in the near term based on all the resistances it has overhead and the fact that the MACD is coming up on the monthly chart with some resistance. I think that's the highest probability. Now, once again, we can go back and look at the daily chart and know that this is what we should have been looking for because we had strong momentum here. And then when we rallied up on this, look at this daily chart, we just haven't had the momentum confirmation here. So we should be looking for a correction on the higher time frames, a little bit more of a pullback. And you can see the momentum starting to increase where the red is starting to get the ADX going, MACD breaking the zero line on the hourly chart. So this break, I think, is a little bit more important from a short-term standpoint. Maybe it wants to lead the move back down towards 125. Now, again, a totally different pattern, but let's look at Nvidia. Look at what's taken place. This came down here and had a beautiful touch and go. It just came down to the zero line and just took off. And ADX was actually incredibly strong during this period and only came back down to the 25 line. So when this turned, it's gotten tremendous benefit from that move. Now, one of the things I want to point out is look at what this has already done. This is exploited. I mean, this is so far away from the 18-month line. It came up to our big round number at 500. Always be on the lookout for these big round numbers, 100, 500, 1,000, stuff like that. Those are going to be very important as time goes on. And now on a weekly chart, look at how the MACD got so far away from the zero line here. It's just ridiculous how far away it got. And now we're showing a little mini divergence. You see how this made a lower high with this making a higher high. So a break of this 18, I think, will be very important. We're starting to contract here. I think this wants to consolidate. Now, I don't think it's the end of the world because look at how strong the momentum is. This is powerful momentum conditions. But we have to, I think, respect the fact that it got a little ahead of itself and it probably needs more time to correct. I think the 400 number is also crucial. If we break 400, then we have to sort of expect a deeper consolidation phase. No real shift in the hourly chart at this point. The momentum is still pretty strong to the downside, although we do have a little bit of a climatic look. I think if we can get back up through 440, it might want to bounce a little bit higher up towards the 18-day. So that is, I hope you enjoyed this segment. You can contact me through LinkedIn, Twitter, or find my research on RabilStockResearch.com. In addition, if you'd like to learn more about trend, MACD, and ADX in multiple timeframes, I am offering my book in a PDF format at a discount. Go to RabilStockResearch.com/book for more information. Have a great trading day, and I'll see you next time.